everyone. I'm your host, Tom Shaughnessy, and welcome back to Chain Reaction, a research-driven podcast that's a part of Delphi Digital. If you're not on Delphi's research portal, you're missing out on the critical analysis read by the top minds in the crypto space, so be sure to check it out. One quick housekeeping item. Nothing said on this podcast is a solicitation to buy or sell any security or token or to make any financial decisions. I may personally hold tokens mentioned on the podcast, and you can view our show notes below for our complete disclosures. With that out of the way, I wanted to give a quick shout out to our wonderful sponsor, eToro. The best way to be smart about trading crypto is to use the smartest trading platform. eToro is one of the largest trading platforms in the world, with over $1 trillion in trading volume on the platform per year. U.S. customers can trade the most popular crypto assets with extraordinarily low fees. And if you're not ready to trade yet, you can practice on the platform with their virtual trading feature. Best of all, you can connect with 11 million other eToro traders around the world to discuss trading, charts, and all things crypto. You can create an account at b.tc/eToro reaction or click the link below in your show notes. Just scroll down on your phone, click the eToro link, and it'll bring you right to their website. Hey guys, I also wanted to tell you about how tokenized real estate is here. Realty is the first platform for tokenizing real estate on Ethereum. Realty fractionalizes real estate into affordable tokens on Ethereum, which means that you no longer have to have a significant net worth to invest directly in real estate properties. Realty properties start at just $63, and properties on Realty are curated by their team of real estate experts. If you are not a U.S. citizen, visit realty.co, that's REALT.co, to sign up now. Browse the marketplace to view properties that are tokenized on Ethereum today. With that, let's jump into the episode. Hey everyone, welcome back to the podcast. Today I'm thrilled to have on Ryan Selkis, who's the founder of Messari Crypto. Ryan, how's it going?
Well, man, thanks for having me.
Yeah, of course. So Ryan, you've had a storied career. You were at a bunch of other places. You were at ConsenSys, you're at CoinDesk, you're at DCG, which is the parent of CoinDesk. When did you get involved in crypto? And tell us about what crypto was like then.
Yeah, I love how 6 years is a storied career now.
It feels longer.
Most people spend decades. Yeah, so obviously the industry is still early. I was first exposed to it in mid 2011, 2012, around the debt sequester, if you remember that, when the U.S. debt was downgraded. And I had the worst investment, the best investment thesis, but the worst execution of all time in terms of capitalizing on it. So I learned about Bitcoin. I ended up buying gold, shorting the Treasury ETF, and not buying Bitcoin. And I was 0 for 3, but I had the right macro thesis. And I came back to Bitcoin a couple of years later because I wasn't a developer, engineer, and I just didn't want to go to a cafe to buy Bitcoin and hand someone cash for a USB stick because it sounded too much like a drug deal. But once Fred Wilson had invested in Coinbase, the Winklevoss twins came out with their ETF proposal. And most notably, when they shut down Silk Road, that's when I started to pay a little bit more attention. So this is like late summer of 2013. Bought my first Bitcoin, was actually in the process of winding down my previous startup that had nothing to do with the industry. And basically went down the rabbit hole, became a full-time analyst, kind of independently, first consulting and doing some contract work. And then, as you noted, joined Digital Currency Group to help with investing, since my previous experience was in venture capital.
Gotcha. So a lot of people talk about it being, 1996 in the internet phase right now, and I feel like we hear that every year. What's the difference in nuance back in 2013 versus 2019? Everybody says, it's 1995, 1996 in the internet, but what are you actually seeing? What are your feelings of conversations now versus, the 2013, 2012 era?
I think Bitcoin is actually much more mature than that right now. It's everything else that you kind of have to bifurcate. So I really think that you're talking about two different industries right now. You're talking about Bitcoin, which is very asset centric. And then you're talking about crypto, which is everything outside of Bitcoin, that is very protocol and application centric. People have rallied around Bitcoin and its store of value narrative, and it's starting to hit critical mass. World leaders are talking about it. It's getting regulated. The infrastructure is there. So we're basically just looking for a catalyst at this point for more people to think about a form of digital gold and kind of sovereign, censor resistant form of value transfer to really kind of hit the next phase of growth. Everything else, it's early internet. There are very few use cases that actually matter and that have had any meaningful traction whatsoever. Really, the only two might be ICOs, which you could argue is just a Ponzi scheme or a house of cards, because most of those token sales have collapsed in value since the highs in 2017. And then there's everything that's going on with DeFi now, which is, I think, what everybody's kind of hitching their wagon to. It's like DeFi and DAOs. This is going to save us, or this is going to be like the next leg of growth for the industry. And there's some truth to that, but I think that you have to look at all of that crypto, smart contract driven innovation as early 90s internet, or even earlier. But no comparison is perfect. I just think you have to separate Bitcoin and everything else.
That's a really good way to look at it. So it probably makes sense to jump first into Messari, because it's kind of a parallel to what you're bringing up now. You guys see every project first. You guys cover every project. You have your registry, which is a transparency initiative, which, full disclosure, we're a partner of yours. What are you guys trying to accomplish with the registry, and what problem was there in the market that you felt you had to solve with the registry?
Well, I mentioned I was at Digital Currency Group on the investing side. We actually bought CoinDesk in late 2015, early 2016. So I ran CoinDesk for year and a half, led the restructuring, and it became clear in 2017 that the asset class was going to be much, much bigger than just Bitcoin. And from a staffing standpoint, and just based on how the company was structured, recognized that it might make more sense to build a new company that was going to actually focus on the data engineering necessary to pull in markets data and blockchain data and all other types of miscellaneous feeds to give people a more holistic picture of what these assets would look like. And so left, took basically, I was going to take a few months off. I ended up taking like a few weeks because that was like the height of the bubble, right?
Gotta get a vacation sometime.
Yeah, right. And we started Messari to bring some better transparency and start measuring the fundamentals of these assets across the ecosystem. So late 2017, I got connected with Dan McCardle, who I'd known previously, having invested via DCG in his previous company. And he showed me OnChainFX, which was his new dashboarding tool that compared, at the time, I think 60 assets across a variety of metrics that weren't available anywhere else, like fully diluted market cap, on-chain volumes, exchange volumes, and it was basically a pivot table for crypto assets. So we use that as kind of the first killer application for Messari, but also recognize that in order to actually build something that could sustainably be more like a FactSet or a Bloomberg or an S&P, you had to first start with basic data standards and disclosure standards around some of these projects, because actually getting circulating supply info requires some type of collaboration with the teams that actually issue these tokens and then sell them over time. If you take Ripple's word for it, if you take Stellar's word for it, if you take the Litecoin Foundation's word for it, you're going to have three wildly different levels of quality in those disclosures, because they have three different types of supply issuance schedules and mechanisms to actually distribute the supply over time, and different mechanisms of control.
Gotcha. So, just to zoom out for people that may have never been in the financial world, what you're talking about is pretty normal data to have as an analyst. If you're on Wall Street, you never have to worry about finding the accurate number of shares outstanding or anything like that. What you're talking about is that in crypto, before OnChainFX, before Messari, these basic things were very hard to find, and they still are.
And this is where the Registry Initiative comes in, right? So I can't tell you the number of teams that we've heard of or that we know that, their one-liner is, we're going to build a Bloomberg for crypto. And that's fine. I think, everybody wants to do that. And obviously you want to build the biggest, most robust, data platform and one-stop shop for information in this industry, because that could be a very big prize. But the question is, how do you get there? And for us, we were looking around in 2017, and we're like, well, we can't build a fully baked data platform. We don't know what the fucking circulating supply is for some of these top 10 assets. So what's the root cause there, right? Why don't we actually have that information? What you realize is for things like Bitcoin that were launched, basically anonymously, that were miracles, and the fact that they survived, that has, basically full transparency and predictability around both the governance of the system, the monetary supply, the incentive structures that are in place that make the system hum. Everything else is less transparent and less obvious than Bitcoin, from number 2 all the way on down, because there's some additional element of human control that is much, much greater than what you see in Bitcoin. So with that, you have to figure out how can you organize information from some of the humans that are actually driving decision-making in these assets. That could be around token economics, that could be around supply distribution, that could be around technical roadmaps.
Makes a lot of sense. So it sounds to me like you guys have the data platform, which is OnChainFX, and you could access it, get accurate data, but that also feeds into the registry. So it sounds like the two are building off each other in a way. These aren't two separate things.
Yeah, it's the other way around. So starting with the most basic data structures is more similar to what you'd expect from Edgar in the securities markets. Edgar Online is a terrible business. It's changed hands a couple of times. It raised money. It was like an awful investment. But it's a terrible business because the SEC exists and securities laws exist and disclosures norms exist in the securities market. And so you have all of these filings that used to be on paper that basically Edgar Online digitized, and they created something called the XBRL standard, which was just a data structure that would make it easy for any data platform, any investment bank, anyone that wanted to access that information to pull that automatically into their own software. And what we're doing with the Registry Initiative and cleaning and standardizing some of this data is similar to creating not just the XBRL standard, but also what should a crypto equivalent of a 10K or an S1 look like. We say that these things are not securities, and by and large, I think that's true, but there's certainly some properties that are pretty messy to get around if you're trying to help a regulator or just an institutional investor get comfortable with these assets. And so it's not enough to just say, well, these aren't securities, so we don't really need anything like that. We got to figure out, like, community-wide, what would be a norm that, even if it's not a company, maybe a community could rally around to complete a profile that's less of a 10K that's audited by one of the big four and more of like an enhanced Wikipedia page that is always up to date or fact checked, sanity checked by a broader community. And at first, we'll kind of serve that central administrative role to do those edits. And over time, that function is inevitably going to be decentralized.
Gotcha. That makes a lot of sense. So a lot of people in crypto, they'll visit a site like Algorand or Blockstack or Stellar or Ripple, and they'll take the team's word on circulating supply, metrics, inflation, issuance, consensus mechanisms, rewards, all of these things. But what you're saying is that, and it's obvious, I think it's obvious to some, but we're trying to attack the global market here. What the teams give out is not always accurate or even easy to find, right?
Yeah, I mean, we'll talk to, we've spoken with a few hundred teams now, and almost 70 of them are actively participating in our registry. And I'm sure, we'll have another few dozen within the next quarter or so. But you talk to 10 teams and 9 of them say something to the effect of, well, we're very transparent with all this information. It's on our website already. We're very actively engaged with our community. I know that there's a lot of fraud in the ecosystem and there's a lot of bullshit, but that's not us, right? Like, we're very good about this. And they're all basically saying it about each other. So everybody recognizes that there's this structural problem. But no one wants to admit that there might be value in a third party ecosystem that serves an audit function of sorts, just to call bullshit and fact check. Because there's never any problems when things are going well with transparency. It's only when kind of things are hitting the fan that communication slows down and the insiders tend to trickle out information, if it's bad, to their friends and investors that are inside. And you kind of have the worst of the public and private markets in crypto in terms of information asymmetries and liquidity.
For sure. So when you guys have a project in mind or a project approaches you guys to be a part of the registry, it seems, and I've heard that it's a pretty rigorous process. I guess, what are the hardest parts of the process, or what's the hardest information to find, or does this really vary project by project?
It varies project by project. To be honest, the first round of information that we try to get as an MVP or just to kind of develop a consensus around, it's relatively easy to get and to check. It's just time consuming, right? So someone actually has to do it, and you have to do it in a formulaic way. But think about, and there's no perfect comparison. And I hate using the 10K comparison, because then all the token teams are like, well, we shouldn't do this because it looks like a security. And we've kind of de-risked that, because everybody, we've got so many teams playing ball now that it's less of a bit of pushback. But think about a 10K. You've got like the sections of 10K. You got your business description, your risk factors, the principles, the management discussion. You've got the financials. You've got the kind of key disclosures around the board and whatnot. We're looking at stuff that's like front page of the S1 or 10K, like your circulating supply, your authorized outstanding, future supply of tokens that will hit the market, the principles, where is it located, what are the kind of affiliated legal entities, if there's a foundation or a company associated. And there isn't always, right? Sometimes there's multiple, but getting that is valuable. And then we try to get the basics, right? What does the token do? How is it supposed to be used? If there have been any updates to it? Have these smart contracts, been released to the wild? Is this just, a token without a network right now? Is, where is the where's the team or the community and the technical roadmap, and has any of this actually been audited? To give people at least a starting point. In the future, you can layer on additional like on blockchain analytics and a number of other kind of more advanced data sets that we're looking to roll out in 2020, which is one of the reasons that we're taking this multi-tier approach to working with our customers.
Makes a lot of sense. And when you're going through this process, I'm sure you meet teams that aren't helpful or are obtuse or vague, things of that nature. Is there anywhere that you guys draw the line and say, hey, look, we know you want to be part of the registry, but look, you're just not giving us enough information, or you're just not giving us straight answers, or, we just don't have enough information to, put our name next to you guys. Is there anything like that comes up, or do you really just say, do you just disclose to people online and you say, hey, look, they didn't give us this info, or, we don't have data there?
Yeah, I mean, because we are charging an annual fee, it's very unlikely that we have teams that are going to pay us and then, not actually provision any of that data. Because even if a team actually pays us the fee, they don't get like a badge or kind of recognition on any of our systems or via the API that they've actually completed the process. So, I think there are a couple of teams that haven't completed their full profiles, that have essentially like paid us and don't yet have a badge. But it's in some cases that's because, hey, we want to support you guys. Our lawyers, we're dealing with something, right? Which is wink, wink, nudge, nudge. Like, hey, we've got some issues in the U.S. And so we're basically in batten down the hatches mode. But we believe in this and we want to participate, and whatever, we're fine with it. We recognize the limitations. But the reason we try to tie the two together is because it's much less likely, or I should say, it's much more likely that if we just open this up for anybody, it's the same garbage in, garbage out that you have on all the other data platforms. And there's no skin in the game to get it right the first time, much less actually keep this profile updated on an ongoing basis. And so if we're successful, it's going to be because the teams that are working with us rely on us not just for that kind of initial sanity check and vetting, but because other exchanges, other information providers are relying on this data, and we're truly creating like this common standard that people are building on the top of.
Hey everyone, we'll continue this conversation shortly, but first, a quick word from our amazing sponsors. Are you interested in getting into the cryptocurrency markets but don't know where to start building your portfolio? We have the answer for you. It's called Copy Trader by eToro. With Copy Trader, you can automatically copy every trade of eToro's top crypto traders at the exact price in real time. No need to study up on markets or develop your own strategies. Simply sign up and copy the trader of your choice. Any profits they make, you do too. With eToro, you get access to the world's most popular cryptocurrencies with transparent trading fees all in one easy-to-use app. Copy the smart money with eToro. Join now at b.tc/eToro reaction, linked in the show notes below. I also want to tell you guys about Celsius Network. They're doing a really cool thing trying to revolutionize the way we think about financial services. Basically, they're offering their users up to 10% annual interest on their crypto deposits, and there's no secret to how they're doing it. That 10% comes from them sharing 80% of their profits, rather than the minimal percent normal bank share. Celsius is giving users $10 in Bitcoin when they make a deposit of 200 or more in crypto or stablecoins when they use the promo code CHAIN. Celsius is linked in the show notes below. Check them out. Right. If you're thinking a few years ahead, I'm sure you've thought about this a lot. Let's say 5 years from now, you guys have the majority of projects on the registry. The data is very transparent for people to follow along with. What does that actually mean for the space? Like, do you envision a space that's has less scam and FUD, or do you envision that the transparency you guys could provide at scale will really bring crypto into the next era of legitimacy? Or I'm just wondering how you think about Messari's effect on the world, like in 5 years.
I think that all sounds good. I mean, the answer is I don't really know. I don't think we know yet because we're still in the experimentation phase industry wide. So I have no idea how to handicap our registry churn, not because we're kicking them off because they're fraudulent, but just because these protocols don't get adopted. They just kind of gradually wither and nobody cares about them anymore.
But it seems like
I don't know if that's 10%. I don't know if it's 90%, right? Yeah. But what I do think is going to happen is, the Venn diagram of traditional financial assets and crypto assets is going to overlap at an accelerating rate. And there's going to be more types of assets that are going to need to be vetted on some platform like this, whether it's us or someone else. And I can make an argument that there's a network effect around this right now where I'd be very surprised if it was, something else, because why compete with something that's a free base standard?
Exactly. Yeah, I don't see why somebody would create another registry or something at that point. Like when you have the format and the template up, it just makes more sense to center around one entity. So, Ryan, thinking ahead, you said earlier that you hope to decentralize the platform over time. That seems amazing for your ecosystem. What exactly would that look like? Would that be like any project can come to you and anybody could validate it and add them to the registry? Like, how does that work?
Yeah, so very early on, we were fascinated with the concept of token curated registries and curation markets in general. Still are, but it's just too early. And as we were getting the 1.0 of the registry, mocked up and talking to some of these teams, the irony is, I know a lot of these guys, so they're like, Ryan, I trust you, and I trust your motives, and I trust, your team is going to, do the right thing. But I don't trust TCRs, right? So, and I think that at some point the tech will get there. But even as we were thinking about the decentralized aspect, right? So the token, curated aspect. One of the reasons that we didn't go forward is it kind of did look like a security, because the way that we'd envisioned it, and frankly, the way that I think most quote unquote utility tokens are going to have any value, is that you'd have multiple entities like Messari competing for network fees, verification fees that were essentially going to go, instead of directly to a party like us, to a network. And then you'd have a set of validators and almost like a big four set of accounting firms that would do all of the work and compete for these fees on a more programmatic basis. And so there was incentive alignment from the major parties that need access to this information, shouldn't necessarily be doing it themselves, right? So the top 10 exchanges, for instance. And there was also a pool of capital that would incentivize both the token teams and the major liquidity providers and regulated entities to support this ecosystem, but also pay an independent set of validators to do the work themselves. And I think the reality is that we launched the company in early 2018, late 2017, and it was basically a straight shot down from like all-time highs, down like 85% for the first 18 months that we were running, or 12 months that we were running the business. So no one cared about being like auditor number 2.
Mm-hmm. Yeah.
I think as we go through the next phase of growth, then the universe of addressable assets goes from maybe a couple hundred to a few thousand. And I think maybe the first area that you'll see the second or third validators or potential collaborators on this decentralized initiative pop up would be overseas, right? So who's going to be like the Chinese equivalent of Messari? I can say that we're going to put boots on the ground in Hong Kong or Beijing, but the reality is it's just a totally different universe. And based on how we've thought about the system design from day one, it probably makes more sense to have a domestic partner there, right? Or a regionalized partner. And so, I don't ultimately know what this is going to look like in 5 years, but I have a pretty good sense that if we're successful as a company, right, then it means that we have delivered this open network as a base layer, and we've completed a successful transition to a purely B2B business that does a combination of analytics and kind of programmatic verification for the registry, but also it starts to level up into data analytics, more like a FactSet or a CapIQ on our way to building a broader platform.
Yeah, that's huge. Definitely agree on potentially having a partner because it's just a totally different world out in the East, right? Different cultures, different projects, different ways of life. So it's definitely harder to look into this. I guess going back to the other question I had earlier about you potentially bringing the space forward, do you feel that Messari and the registry could help legitimize the space, I guess, specifically for, say, regulators, like a self-regulatory authority, like an SRA, something like that? Because it feels like if you guys are able to bring transparency across a broad, swath of the industry, you can really provide good data to regulators, good arguments, provide something that they can look at and just view all the data. It just seems like you guys can really help on that front, if anything.
I would really like to say that we're going to help legitimize the industry, but I'd be very content with just having us not look like assholes, which is
a good point.
I mean, maybe I'm just not like aiming aspirationally enough. But the fact of the matter is no one cares about the assets outside of Bitcoin and Ethereum in the mainstream markets.
Yeah.
Everything looks like child's play. You can say, we've seen this time and again, things start out by looking like toys and then they get more interesting and professionalize over time. That's certainly true. But where we are in the market right now, it's basically remediation, right? How can the industry at large take its lumps, but survive in advance and actually have the time to do the experimentation and actually build out interesting applications, so that during the next phase of growth, the really, really high quality projects all have some type of standards for how they're communicating with their global ecosystems.
No, that's huge. And
that's not to say that we think that all the assets outside of the top 2 are garbage. Far from it, right? So if you look at DeFi Pulse, I think 4 of the only applications that are on there that actually have tokens are all on our registry, right? So Maker, Synthetics, the folks over at Melon, and a couple of others. So like these protocols that we're working with, like the teams are good, like they are on the registry, I think, because they want to do the right thing. Because if they're going to defraud people, we're going to find them. We're going to say this is fraudulent, and thank you for paying us that fee to just tell the world that this is a Ponzi scheme or bullshit or whatever it is. It's just we're going to be useful, I think, not for the institutional investor anytime soon, but for the funds that are starting to allocate capital, and that has ripple effects because as they're able to show their LPs more of their work and get them more comfortable with the industry at large. Like that's kind of the steps that I think have to take place between anyone giving a shit about anything other than Bitcoin and where we are right now.
That's really good call, Ryan. So we've spoken about the registry a lot. It's going to be linked in the show notes for any projects that want to sign up. Definitely check it out. But just switching back to OnChainFX for a little bit, me and the guys, always joke about how hard it is just to find, a CSV file of some data or something. You guys are attacking that. I was wondering, how's traction going with the pro platform of OnChainFX? What does it offer versus, the normal platform you guys provide? And guess how's it going there?
Yeah, so a couple brand notes, and this is just us kind of transitioning some products. But OnChainFX.com is a new standalone site that is lightning fast, has fast loading charts, real time price updates, and some of the basic metrics that you might want to look for on a day-to-day basis. It's clean, it's fast, it's especially good for mobile because there's no ads on it, and I think it's the only kind of real-time price feed that you can look at in real time and swipe if there's like a big market move. So check that out if you're trying to condition yourself away from some of our competitive coin ranking sites that I won't name by name, but everybody knows who they are. And then there's kind of the old OnChainFX screener, which is now just part of Messari Pro. And that is a much more advanced dashboard that has 130, I think, different metrics that you can sort, filter, and run queries against if you're looking to do a sector analysis or sort by any given metric that's available on the platform. The thing that we're going to be rolling out within the next couple of months is our time series analyses and then our new asset pages. So everybody has been like asking for time series data.
Ryan, let's go. We need it.
I know. So so it's easier said than done, right? Because we're only one company, we're a small team, and we have to we chose intentionally to go broad versus deep. So this is as much an engineering challenge as it is a business challenge, where we have some really good partners right now that we're ingesting data from. But we also, work hard to find like a common ground. Hey, what would you like to feature? What can we work on together? What, are we going to split with you in terms of fees if we generate, income from this? And get them comfortable. That's not just going to cannibalize their very niche focused, business. And we have a couple of very good partners that I think we're going to get the balance right for. But that's really the only gating item in terms of time series analysis.
Yeah, it's pretty incredible though. Your stock, I almost said stock screener for a second. Going back, geez. So your screener though has things that are well beyond just price metrics. You have ratings here, you have GitHub data here, which is amazing. You have governance. Is the treasury decentralized? You guys are really going beyond just data. It seems like that stuff is really hard to find. Is that right? Or
yeah, it's contextualizing this information. So our team is split 50-50 research and product engineering. Right. So we do have, phenomenal research team that's churning out reports, that's backfilling a lot of this data. We have a kind of an extended network of analysts that especially early on volunteered to help us populate, some of this basic information. And over time, I think, we're just going to continue to add robustness to all these asset profiles. Before we get to the time series data and kind of the charting features in the next couple of months, we are going to be rolling out new asset pages that essentially look like evergreen initiating coverage reports. So if you look at an asset profile, you're pulling it up right now and people can't see it, but this is paining me to look at based on what I know it's going to look like in just a couple of weeks and kind of what we've already mocked up and is everybody on the team is very excited about. But that's going to be, I think, a very powerful tool as another static tool, at least a snapshot in time. For us, the goal is how can you kind of hit the trifecta where you have something that at any time you could download it and it would be like a fully baked 8-page report that gives you everything you need to know on the project. How can you do the cross-sectional analysis? So that would be comparables within these new asset pages and also manipulating data via the screener. And then the third is what everybody really cares about, which is time series data and charting functionality, right? So all of those are kind of known things that are on the product roadmap. And we just doubled the size of the engineering team and the research team in the last month or so. So we're getting to it brick by brick.
So we're getting the time series data this week, or is this?
You'll have the asset pages in the next couple of weeks. 2 weeks TM. Although we have just this, I'm not going to even name him by name, and he's probably fine with it. But it's because I don't want anyone to ever know about him because he's so good. And he's like one of the only. He's former Palantir engineers, our lead engineer, and probably the only engineer that I've ever worked with that like always hits deadlines. I'm like fucking without fail. It's crazy.
You got to keep them.
So it will be like 2 weeks from now that we release these new asset pages, and we're excited about that.
That's huge. So Ryan, the other thing that you guys are doing with OnChainFX is that you guys are really taking a lead in, throwing out new ways to look at cryptos that really drive transparency home. I mean, I think the most obvious is that you guys rolled out 2050 market caps and percent issued on a 2050 basis. Like, that's massively important because you may have something like, I'm looking at XRP, so I'll take the pick there. You have something where the market cap is 12 billion, but the 2050 market cap is almost triple that. Mm-hmm. So, how often do you guys look at this data and say, hey, you know what, we can really make a new metrics to make this data clearer or more transparent? Because it seems like the 2050 supply cap is one that's really interesting here.
Yeah, and 2050 is basically just shorthand for fully diluted. But 2050 normalizes for assets that are inflationary, right? So that don't have a fixed cap, as just kind of a clarification there. But the thing with Ripple is it's actually not a $12 billion circulating market cap. It's actually closer to 6. So we report both, right? So the reported market cap, basically what you would see elsewhere, or what the team itself is reporting in the case that you're pulling from Ripple's API, and then there's our assessment of what the liquid market cap really is. And that has to do with contractual encumbrances. So our founders restricted to reselling agreements? Is there an affiliated foundation or corporate entity that is subject to some selling restrictions? Is there a programmatic lockup or vesting schedule for the founders? So this isn't just Ripple. This is kind of in general with many of these assets that have big treasuries, and we try to normalize for that and basically get to something akin to a free float methodology that you'd expect in public markets as investors consider weightings for different baskets of assets to the extent that they're used for ETFs. So we, I think have used that historically to drive the point home around transparency, but we could just as easily point to other assets where we're tracking their ongoing governance updates, and this would be things like Zcash and Ethereum, right? Where that has as or more of an impact as what the circulating supply number is going to be, because you want to know when the ETH 1 and 2 transition is going to be. Is that, how are the developers thinking about composability? If those conversations start looking like they're meandering a certain way, well, it's a net negative for Ether and net positive for some of these other smart contract platforms. So that qualitative information is really the fundamental metric that matters. Zcash, right? Is this going to split? Is the fucking core team going to leave because they don't have incentives anymore to work on this? So, it's not as black and white to just look at, the volume and price and even blockchain data that others are tracking. You really have to take this, mosaic approach to figuring out what matters.
Makes a lot of sense. And Ryan, just closing out some, higher level questions for you. You guys see a ton of projects in the space, especially on the registry side, obviously on the data side. Are you seeing more, I don't know what the right word here is, maybe traction, maybe interest on the, dozen or 2 dozen layer ones that are set to launch over the next 2 years? Like, Polkadot, we'll argue about that if it's layer 1, I think it is, whatever, or Definity or BlockStack, stuff like that? Or are you seeing more interest on like the DeFi Web3 side with things like MakerDAO and Synthetics and Uniswap and Kyber? I'm just kind of wondering where the interest is there, or is it just general, whatever comes up?
When you say interest, you're talking interest from whom?
I guess from you guys. I mean, is there any sort of, is your team seeing more action on that side, like more people that want to be on the registry on the layer 1 side versus projects built on top, or is it pretty much an even split?
Yeah, it's a mix. I think it's a chicken and the egg thing, right? So if you're looking for actual utility and which projects are trying to make a dent in getting real world users on board, then the projects that are alive in the wild and working on DeFi applications are probably the most interesting right now. But if you're thinking about on a more macro basis, what has the capacity to serve as a complement or substitute to Bitcoin and Ether. Like, those are two very, very different types of projects. And they're both, with merits, because you don't know if Ether is going to win. You don't know if Bitcoin's going to win. They certainly have a massive head start. But the end game right there, now and in the next 6, 12, even 24 months isn't necessarily how many users are on board. It's more relative value, right? So is this a marginal or significant improvement to build on this stack versus Ethereum for whatever reason?
Definitely agree. And second to last, Ryan, thinking out long-term, 5-10 years, do you think that a Bloomberg buys you guys, an S&P 500? Because it seems to me like you guys would just be coveted as the space grows.
Yeah, I mean, I could definitely see us buying S&P in like 5 times.
I like that answer.
So, we'll see. I mean, I say that tongue in cheek, but if you think super long term and meta, I think we from day one have thought that we are going to be an important coordinator of some of this information, but to think that any central entity is going to have a monopoly on data in this new open permissionless stack is probably not the right way to think about it. So I would bet that if we're successful, it's because we've played a leading role in creating a much more open, incentive aligned ecosystem of data providers than what you see in the current financial data stack.
Well, it makes sense. I mean, that's plays into your plan on decentralizing over time. That's excellent. And Ryan, last question for you. If you retired tomorrow, left crypto altogether, what would you focus on? What would your job be? What would you want to do?
I honestly, I don't know. That's a lie. I kind of know. So, I got into this industry, broke into this industry writing. I'm probably happiest writing because I've done it so much that I've gotten good at it, I think. Number one, and you always like stuff that you're good at. And number two, like, people actually read it and enjoy it. So I get value out of that. Being able to branch out beyond just like crypto, I think would be fun, but that'd be more of like a guilty pleasure. Tim Urban from Wait But Why is like in my pantheon of writers and lifestyles. But there's a part of me that really hopes that day doesn't come anytime soon, because then I'm going to go like full neurotic, because I am just manic when it comes to writing. I was actually I forget who I was talking to. Oh, Aaron Wright from ConsenSys and Open Law. He was on my podcast a few weeks ago, and we were grabbing drinks the other night, and we were talking about just like writing process. And I said, if anyone ever took like just a fucking like video of my screen as I'm writing a post, they would think that I was insane, and they'd be 100% right. But it actually got me to thinking that at some point soon, I am going to do a screen grab of like how I write a quick post, just so people can see the complete like frenzy of writing a paragraph and then like in between paragraphs, just like copy and pasting like gibberish from some other source and like rewording things. And then like intersplicing that with like fuck if I have a writer's block, right? It's I don't know if other people write that way.
Hey, it's a moat. I mean, you can't copy it.
Yeah, well, insanity is a moat. Yeah, that's what we've triangulated on. Yep.
I love that. Ryan, where can people follow you and learn more about Messari, the site, and your newsletter or podcast? Yep.
So we are Messari.io for the site that has all the information on the registry and has Messari Pro and a vetted news feed with a little bit more rigorous analysis than your typical news feed, plus all of the advanced screener tools that we talked about. And then OnChainFX.com if you're looking for a quick and dirty update on the true price and volumes in real time. It's fast to load. I'm on Twitter @2BitIdiot.
Love that. Ryan, thanks so much for coming on.
Thanks, man.
Hey, everyone. Thanks for listening to the episode. If you can go to iTunes and hit subscribe to the Chain Reaction podcast, it'll go a long way in helping us reach new listeners and help support the show. Thanks again.